Hi, I'm Rick Van Wieren with Remax Properties, and I'm here today with Jim Meer from Senior Living Decisions, who's an expert on senior housing options, and John Haney from Colorado Mortgage Company, who is an expert in how to use your home equity effectively throughout the time you own your home. Thanks for joining me this morning, guys.
Thanks for having us.
Thanks for having us.
So, John, I have never, until I met you, I never really thought of a mortgage as a retirement preparation tool. And I really see the difference there now. And you've got some very unique products that you're offering people now that help people position themselves for their retirement that I just had never really thought of before.
Yeah, I like to think outside the bank, so to speak, which means that a mortgage and debt against real estate can be used as a strategic financial tool. And if used in the right way with in the right purposes, or not just setting it and forgetting it. Most of the time, I find when people take out a long-term loan, they set it and they forget it. Right. I think that's a huge mistake. There is so much opportunity cost with just being lazy and idle with how that money is repaid. And as we look at our aging community and the resources that they have, they've probably built up a lot of equity. And if they are still making a mortgage payment, the home equity conversion mortgage is a fantastic tool to help them eliminate that mortgage payment and preserve their cash flow for the rest of their life.
I like zero when it comes to home
absolutely.
Payments. Yeah.
We also have another financial product that is called Principal First. So if maybe somebody's within 10 years of retirement and they've got a good cash flow and we can then look at this other alternative program that would help accelerate the payoff of their home without changing their cash flow, without changing the way that they spend money. It's just a matter of where their money's parked while they're not using it.
Interesting.
And then of course the traditional model is, if somebody's just getting started, there's obviously lots of available options for them. But we've got lots of different options, and we custom tailor everything we do to each person's unique situation. So.
Yeah.
A thought comes as you're talking about dollars and planning. I think it'd be helpful for them to know what those retirement costs actually could be.
That's right.
For example, I can help them understand maybe independent living, the way they want to live would cost them $2,500 a month. Or if they need assistance, right? Maybe they need 5, 6. If there's cognitive issues, $8,000 a month.
That's right.
And so maybe talking with me, I can add some numbers to what that trajectory looks like.
Absolutely. Yeah.
Yeah, and certainly thinking about it far enough in advance so that, for instance, somebody who's younger trying to get ready for this, instead of buying long-term care insurance, maybe just getting their mortgage paid off quicker might be a viable strategy to get them ready for those times when it comes in. The fact is, you can't pay off a 15-year mortgage on the day you take it out. You got to think of it 15 years ahead of time. So Some of these things are not things you wait until you're in your 60s and 70s before you start thinking of. So, Jim, you're running into people all the time that are at different levels of preparation for where they are in life at that point. But tell us about the people that have been most prepared, and how did that come about, and how did that work, and how did it become better for them as a result?
You actually talked about long-term care insurance at one point, and that can be a good product. But I see successful people that have used their wealth management throughout life, made good decisions, and that doesn't necessarily mean buy long-term care insurance.
Gotcha.
That's an option. But we love those clients that are looking forward. The ones that are frustrating is when they've gotten into a situation and now they're at the point in life where they haven't made those plans. So is there a way that home equity can help catch up with that?
Yeah. We have this program that's called the Principal First Loan. And this is something that's unique and different compared to the way that most people will finance a home. The average person who gets into this program will pay off their home in 10 to 12 years without changing their spending habits without changing their cash flow or maintaining their lifestyle.
Interesting.
And the reason why that happens is it's not magic, it's just math. The way this loan operates is a lot different than your standard fully amortized loan. Because if you really look at a 30-year fixed, your interest rate might be 4%, but it's really 64% if you pay the minimum payments over the life of that loan. This loan completely changes the game, and we call it principal first because the way that the loan is designed is you actually make principal payment on your loan first versus the interest, which is the way that a normal amortized loan is designed.
And so, if I understand these loans correctly, and you've explained this to me a couple times, and I think I'm almost starting to get it, it basically takes your combined cash position and applies all of that against the loan, and then you only are going backwards for just the interest for that month. And when you get your next paycheck, it's immediately applying all of your funds against your principal every time you get paid.
Yeah, the mechanics of how the loan works is it combines your checking account and your mortgage and your savings all together into one financial tool. And the power of this is you take your lazy idle money that's normally sitting around not earning any interest, and you can now use it and apply it towards your home loan and save interest. And like I said, the average person pays off in 10 to 12 years, and the interest savings that we see is sometimes very profound. Hundreds of thousands of dollars in some cases that we've seen.
Yeah.
That's good.
No, that's great. If you want to know more about the Principal First loan that John's talking about, please give him a call. This is a great tool to get your mortgage out of the way as a part of your retirement planning, so that when that time comes when you've got to make the harder decision as to where you're going to go, the mortgage is a lot less of a factor for you because it's gone. In our quest to be your family realtor for life, we know that sometimes it involves decisions about living in your senior years, and we want to be able to help you through that process as well. Please give us a call if you have any questions about the materials we just covered here today. Thanks so much for joining us.